Bismillah ar-Rahman ar-Rahim. The next topic we are going to learn about is activity-based costing. Activity-based costing is a cost accounting technique by which indirect and administrative support costs are traced to activities and processes and then to the cost objects, for example, products, services, and customers. A business can find itself in severe financial difficulties if it is making decisions based on incorrect overhead allocations. Activity based costing provides a solution for properly assigning overhead costs. Assigning costs accurately is important to determine the profitability of products, forming appropriate pricing strategy, and subsequently to make rational production decisions. In this section, we are going to learn about basic terminology used in ABC, activity-based costing, and we will see an example how to allocate overhead charges when we have multiple products using activity-based costing. So first of all, let's learn about some terminologies here. Cost of goods sold. It's a unit cost of product or service which has been or yet to be sold. The components of cost of goods sold are direct labor, direct material, and overhead charges. Direct labor and direct material costs are easy to find out, but the overhead charges are difficult to allocate to the cost objects, means to the products or services. The estimation of cost of goods sold is a key responsibility of engineering managers. Inclusion of labor and material is straightforward, as I said earlier, as these are direct costs and they can be easily tracked. Now, we said that there are three components. These are direct of cost of goods sold. Three components are direct labor, direct material, and overhead costs. Now, direct material and direct labor, we said that are easy to track, but the overhead costs are difficult. So what are the methods which are traditionally used for allocating the overhead charges? It is about adding up all indirect charges of the last year, for example, and these include maybe factory manager salaries, factory office support, depreciation charges for buildings and equipment related to production, office support, utilities, training, safety programs, maintenance, etc. If you see, we have discussed the manager salaries only, not the labor salaries, because labor salaries is directly related to the product in the manufacturing, what the laborers are doing, the laborers which is involved in making that product. So that is direct labor cost, which will be not in the overhead charges. But the manager salaries, because managers are overall in charge of that, several products are made under them, so this is come under the indirect charges. And similarly, there are other of course overhead charges are discussed here. Now what we do is we add up all the indirect charges divided by the total number of man hours spent last year to obtain an hourly overhead charge. Okay, and then add this overhead charge to the product involved based on the labor hours needed for its production. For example, we have, let's say, $800,000 were overhead charges, and assume that 2000 hours per labor worked in a year. This $800,000 are per year. So we have to allocate these overhead charges. We assume that 2000 hours per laborer is working in a year, and there are 20 laborers and 20 laborers. So we have 800,000 divided by 2000 multiplied by 20 laborers. So we have we can say is $20 per hour is the charge per hour. And let's say for a product we are making this product, 4 labor hours are used, then multiply by 4 hours per unit used, per unit of product. Then we have hours cancels. We have $20. 20 multiplied by 4 is $80 per unit is the cost of overhead charges. And then of course you add up direct labor cost involved in producing that product, and also the direct material, and that will be the cost of goods sold. And from here we can look at how much price we have to ask for this product. This is a traditional method of allocating the overhead charges, and this is sufficient if we have one product. If the organization or the company is making one product or 2 products, etc., this method is quite sufficient. However, if the company is making several products and also the cost of overheads are large, then this method will be not accurate and may leads to wrong decisions about the profitability of products or appropriate pricing strategy, etc. So that's what we are going to learn about, how to allocate the overhead charges when we have multiple products and maybe the overhead charges are a significant part of the cost of goods sold. Overhead charges, the most uncertain part of product and service cost is overhead charge assignment. Companies with a single product, the traditional method is adequate. We have discussed that, simple way to do that. However, the companies with multiple products, each product may require a different level of resource to produce. A better method of allocating overhead charge is called activity-based costing, or we can say ABC, activity-based costing. In activity-based costing, we trace the indirect or support costs to activities and then to product. So overhead costs are, first we track them to activities and then finally to the products. ABC, activity-based costing, is most useful for companies with numerous diverse products and when indirect support costs are making up a large fraction of the total cost of goods sold and expenses. As an example, look at this on the left side here. Look at the income statement. We have sales or revenues which is given in millions of dollars, let's say 8,380 millions dollar. Now the second item is shown is cost of goods sold. Cost of goods sold. And this is a major expenditure, which is about 6,000 shown over here. And revenue minus cost of goods sold is then the gross margin. Revenue minus cost of goods sold is the gross margin. And then there are other expenses also. If I go through this income statement, we have another expenses, general, selling and administrative expenses are there. Then pension benefits and R&D, insurance, etc. Another expenses. Then state, local and miscellaneous taxes are there. And then we have depreciation. Depreciation, remember that when we were talking about depreciation is a charge against the revenue. So it is an expenditure. And then this is earning, EBIT, called earning before interest and tax. And that is the when you have the gross margin minus all these expenditures above, we have the earnings before interest and tax. And on that you pay interest and other costs related to debts. This is, let's say, is your interest and other debts. And then this becomes the taxable income. On this taxable income, you pay corporate tax. Let's say 32% is there. And then this is our net income. This net income then may be divided into two things, to common stock dividends and retained earnings. Common stock dividends is the investors who will get the dividends, profit for having their shares. They get dividends on their shares, and the rest the company may, some of the thing company may keep it, and that is called, some of the money which is kept or capital which is kept is called retained earning of the net income. Net income minus common stock dividends is our retained earnings, and this retained earning is used for expansion, for future expansion of the organization, for starting new projects, etc. That is retained earnings. The organization may use this retained earnings for future expansion, and of course they can borrow further money from debt or selling more shares. So you can see from here in this income statement that the net income is that basically goes to the shareholders. Common stock dividends and also the retained earnings are also part of the investment of the shareholders. One more thing is that the income before interest and tax, after paying the interest, then the taxes are deducted. So that's why companies go for also for having debt, because that is beneficial, because they can save on taxes. They have to pay first the interest, and then it becomes taxable income, and then they pay tax on that. Anyway, we will discuss this income statement and balance sheet in the coming lectures. But just to give you idea that the sales or revenue minus cost of goods sold is the gross margin, and the cost of goods sold include what? Cost of goods sold is three components are there: direct labor cost, plus direct material cost, material cost, and plus the overhead charges, overhead costs or charges. So cost of goods sold include the direct labor cost plus direct material cost plus the overhead costs. And we are talking about that how to allocate overhead cost by using activity based costing techniques. And we said that the indirect support costs, how we do that is we trace the indirect support costs or overhead costs to activities and then to products, and we will see by an example. The key terms used for ABC are cost objects. Cost objects are the targets for applying ABC, such as products and services. These are called cost objects. The products or services are called the cost objects. Activity is any homogeneous groups of work. For example, accounting, machining, forging, designing, these are called activities. The cost drivers, these are the metrics or bases used to allocate indirect costs. So any activity, we will see that what is deriving that activity, what is the basis of that, and that is the cost driver. And cost pools are organizational units supplying the value added activities. So these are the terminologies we will be using. Example of cost drivers are remember that cost drivers are the matrix or the basis. So for example, the activity may be the storage. The basis on which we will allocate this costs are how much square of footage, for example, is there. For loading, material movement, etc. activity, we can use the weight as a basis. For machine setup and inspection, we can use man hours as the cost driver or the basis on which we will find out or trace the cost to the products. Machining is another activity. Machine hours are the basis or the matrix, which are the cost drivers. For driving, it may be miles or kilometers. For invoice processing, number of invoices. For production, number of products, etc. These are examples of cost drivers. We have also used the terminology cost pools. Cost pools are the organizational units which are providing the activities. So these are plant, office support, maintenance, sales and marketing department, organizational units, product design and development, procurement, plant engineering. These are cost pools. Now, what are the rationale for basis for ABC? Various activities are needed to create and support products and services, and each activity is measured by the applicable cost driver. Cost drivers are the basis or the matrix, we said that. Cost pools supply the activities needed for products or services. Organizational units, we said that. These are supplying the activities. Cost assigned only to those products or services. Cost assigned only to those products or services requiring the applicable activity. Okay. and we know that activities consume the cost pools because the activities are used and the costs are, of course, allocated accordingly. Now, what is the benefit of ABC, activity-based costing? It results offer a clearer picture of which cost or object, product or services generated profitability or losses. We can easily see from there. Profit maximization by refocusing products or services, by exactly knowing what is the cost of a product, because overhead charges, we said that overhead charges by traditional method, they are not allocated properly to the product cost. So ABC is doing, what it is doing is it can allocate it properly, that overhead charges, and then we can refocus on the profit maximization, etc. It identifies the areas for continuous improvement and eliminate non-value added activities. That is the advantages of activity-based costing. Now we will see an example. There's an application problem. A manufacturing company produces 3 products, A, B, and C. Okay, product A, product B, and product C. The fixed factory overhead is $60,000. So we have the overhead charge of $60,000, comprising of, let's say, 3 activities of $10,000 for material handling, material waste, and procurement. $30,000 is for rent and utilities, and $20,000 for safety and canteen costs. And other applicable data are shown in the table below. We have 3 products, product A, product B, product C. The number of units produced per month is, let's say, 250, 400, and 900. Total material cost per month is $5,000, $8,000, $4,000. The labor hours per unit is 4, 3.5, and 1.5. The labor rate is 25, 20, and $30 per hour. And then machine hour used per unit is, in hours, is 1, 1, and 3. We have to determine the cost for products A, B, and C using activity-based costing method. If products A, B, and C are sold at $400, $350, and $150 per unit respectively, what is the gross margin for each product? Remember that gross margin is the revenue minus the cost of goods sold. So if we have this $400, $350, and $150 per unit, and number of units sold is given to us, then we can say what is our revenue, and then cost of goods sold is we can find out using activity-based costing, and then gross margin can be found from revenue minus cost of goods sold is gross margin. What is the company's total gross profit per month if all units produced are sold? Now, that problem, application problem, we can directly trace the cost for direct material and labor. Indirectly traceable costs are overhead, and these are, we discussed that, these are rent, utilities, material handling, waste and procurement, safety and canteen. Keys for ABC accounting: define reasonable basis. We said that for ABC accounting, for each activity, we define what is driving cost driver, the basis to allocate the indirectly traceable cost, and then we allocate to the products. So here we have the table, and we will go through this table in just right now, in a minute. Okay, so we have the fixed factory overhead is 60,000, comprising of $10,000 for material handling, material waste, and procurement. This is, we can say, is together. 30,000 is for rent and utilities, and 20,000 is for safety and canteen costs. Now we have to allocate these activities to the basis, appropriate basis, and then to allocate to the products. So here we have, this is the data we have been given. The number of units produced per month is 250, product A, product B is 400, product C is 900 per month. The total material cost per month is 5,000, 8,000, and 4,000. And the labor hours per unit is 4 hours for making product A, 3.5 hours for making product B, and 1.5 hours for making product C. And the labor rate is also given, $25 per hour for product A, for making product A, $20 per hour for making product B, and $30 per hour for making product C. The machine hours used per unit are also given, 1 hour for product A per unit, product B 1 hour, and product C is 3 hours per unit. Now direct labor and direct material, we said that it is easily traceable. So what is the direct material cost for, let's say, for product A? We have the material cost per month 5,000, so we can say 5,000 divided by 25, and we have, it is 250, not 25, 250 products are produced. So we have 5,000 divided by 250, okay, it becomes $20 per unit, right? This is the material cost. Similarly, if you want to find out for, let's say, for C, the material cost per month is 4,000, so 4,000 divided by 900, and that will be divided by 900, we have $4.44 per unit. All right, so this is direct material cost. If we want to find out direct, similarly we can find out for product B as well. Just divide by 8,000 divided by 400 number of units produced, which is also $20 per unit. Now the direct labor cost. Direct labor cost is also easy. We have the labor rate 25 multiplied by labor hours per unit, then 25 is our dollar per hour is the labor rate for product A, and multiply by 4 hours needed, 4 hours per unit is needed, then we have $100 per unit. This is direct labor cost for product A, and similarly for product B we can find, and product C we can find. So this is direct labor and direct material costs are easy to trace and they can be easily found. However, our objective is to find out, using the activity based costing, find out the overhead costs and allocate the overhead cost properly to the products. And we have been given the costs as 60,000, 60,000 as factory overhead, which is comprising of 10,000 for material handling and material waste and procurement, 30,000 for rent and utilities, and 20,000 for safety and canteen costs. So let's look at the ABC costing method for overhead charges. We have the number of products 250, 400, 900. The total number of products are 1550. And first we will look at the material handling, waste and procurement material cost, okay, which is about $10,000. This 10,000 we have to allocate now to the products. We have also now what basis we are going to the cost driver or the basis which we are going to use is direct material. Okay, this direct material will be used to allocate this $10,000 to the products. The material cost is also given to us, so 5,000, 8,000, 4,000. If we add that, it is 17,000. Now the fraction of material cost is just what is the fraction of material cost in terms of 10,000. So we have for example product A is we have 5,000 is the material cost divided by 17,000. This becomes a fraction of that multiplied by 10,000 is the thing which we are looking for, the fraction of that. So this comes out to be $2,941 for product A. And then we know how many products have been made in product A category, how many products A were produced, which are 250. So 2,941 divided by 250 will give us 11.76 $. Okay, this is the calculation for that. 5,000 divided by 17,000 multiplied by 10,000, and that is 2,941, and divide by 250 and we get $11.76. Similarly, we can do for product C, for example, or product B or product C, the same method. Just for example, let's look at for product C. So for product C, we have material cost is 4,000. Sorry. $4,000 divided by 17,000, and to find the fraction of that, multiply by 10,000. So what we get is $2,353. Okay, and then just divide by number of units produced, which is $2,353 divided by 900, and what we get is $2.61 per unit. Okay, because these are number of units. So $2.61 per unit. So these calculations are not difficult. We have assigned the cost, material handling and related cost per unit is assigned to each product. Similarly, we can do for others as well. let's look at rent. For rent, there are rent and utilities. So here it is 30,000 together. It's not given that how much is rent and how much is utilities. We are assuming half and half. So rent is 15,000 and utilities is 15,000. Now for assigning rent, we are using the basis is unit of product, number of unit of products. The total number of products are 1550. Okay, then we have just divide this 15,000 with 1550. 15,000 by 1550. 15,000 is the rent and 1550 is the total number of units. So it just becomes 9.68. $9.68. Okay. Now let's look at the what we call it, utilities. Okay, for utilities, so this is rent per product is just simply 15,000 divided by the total number of products, 9.68. It is the same, we considered it same. For allocating the utilities, we are assuming the machine usage as the basis. Machine usage is our cost driver or the matrix or the basis which is driving this activity of utilities. So this is we have the machine hours per unit is given 1, 1 and 3, and we can easily find out that how much product machine hours are. 250 products are used, 250 products are produced, so 250 multiplied by 1 is 250 here, 400 multiplied by 1 is 400, and the 900 units were produced, so 900 multiplied by 3 hours, we have 2700. These are the machine hours, total machine hours used, 3350. And then the same way we have the fraction of total utilities used for product. This is simply, we know that the utilities is 15,000 here, so we have we can find out the fraction of that. You have 250 divided by 3350, for example, for product A, looking at that, multiply by the utility rent or utility expenses, 15,000. So this is the fraction we got, 119.40, and then you just divide it by the number of products, so it is 4.48. okay, very simple. And that's 4.48 for utilities per product per unit, 4.48 for product A, dollars per unit. This is for 4.48 for product B, utilities per unit of product, and 13.43 for product C. And then we have the third item of overhead is safety and canteen costs. The same way we can allocate safety and canteen cost, which is $20,000. We will be using labor hours spent as the basis for allocating these costs to the products. So the labor hour for each type of product is $4 per unit for product A, 3.5 for product B, and $1.5 for product C, labor hour per unit. And then we know the number of products produced, so you just multiply this. 4 multiplied by 250 is 1000. 250 products are there for product A. Product B are 400, so 400 multiplied by 3.5, we have 1400 here. And 900 products are for product C, so 900 multiplied by 1.5, we have 1350. If we sum all these three, then this is the total number of labor hours used for producing these three products. And then we can find the fraction. The fraction is the same way. We have 1000 here divided by 3750 multiplied by the total overhead cost for safety and canteen, and that is the fraction we got, which is not given over here. One step is missing in this table here. And then if we just divide this fraction with the number of products, 250, we will get the safety and canteen cost per unit for product A, so which is $21.33 per unit. And the same way we can do for product B and product C, etc. Now it's time to just look at the total cost for the each product. We have the material cost. We have discussed that material cost is direct material cost and direct labor cost are easy to find. We can see from here, we have already done it. 5000 divided by 250, for example, is the direct material cost for product A, and 8000 divided by 400 is for product B, and this is coming as $20 per unit. This is also $20 per unit. And for product C, we have the material cost is 4000 divided by 900. It is $4.44 per unit. So these are the direct material cost. The direct labor cost is also easy. Just 4 multiplied by 25 is your labor cost per unit, because the labor hour is 4 hours are used for making, let's say, product A, and then there are labor rate is 25, so labor cost becomes per unit is 100 per unit. And the same way the other, we already did that. I just did it again for you, just to see that these are the values we get for direct material and direct labor cost. The rest we have worked out above: 11.76, 11.76, and 2.61 for material handling and other related costs. These are there. Then 9.688 is flat for rent for every product. And then we have for utilities, we worked it out, and the safety and canteen costs, and finally the total unit product cost for product A, product B, and product C. And then selling price was given to us. These are the selling prices for all these three units, three products. And then the gross profit per unit is the difference between the selling price minus the cost of goods sold. So this is the gross profit per unit coming here. All right, and then gross margin is just the margin, which is 232, for example, $232.75 divided by $400 multiplied by 100% to get this 58.19, 61.55 and 44.556, etc. The total gross profit per month is just we have the gross profit per unit 232.75 multiplied by 250 products we produce plus 215.42 multiplied by 400 products we produce for product B, and the plus gross profit per unit is 66 here, sorry, 66 here, 66.84 multiplied by 900, and that's the total gross profit per month coming is $204,511.50. That's it. I mean, we have worked out the problem, and we have found the how much gross margin is there in percentage. If we want to change the prices, we can easily now see how much margin we want to have, and ABC has provided an accurate method of allocating the overhead charges. As an example, I have also put one problem 6.5 solution in Moodle, so you can look at that as well. And that's all for ABC costing.